Good afternoon, everybody. We're back again, like we said. Starting the stream a little bit earlier because we've just taken out London's kill zones high. So this is going to be important for a couple of things. So first of all, I'm expecting price to take out Asia's high. So I do believe price will continue higher. It is possible that we displace downwards from now. We leave this high intact and we then get the displacement to the downside that we're expecting to enter sales. EU, however, has not even taken any liquidity. It's just been going down. So if we look for potential, what's those things called again? Divergence. So from the ultimate swing low to the New York kill zones low, it's higher, I believe. So we have this, and then from London kill zones high to current high highs and the high low. Here we have the high low, but we have a lower high. Would you notice? That is what we call a divergence. So what does that mean? Well, divergence in line with bias, and then choosing the correct pair as the key. So here we have a lower high, so we're creating these lower lows, lower, etc. And we're expecting price to go down. So this pair is extremely weak because we've just continuously gone down. We haven't even gotten any liquidity. Number one. Number two, this one here is stronger. Like I said, with GU, it tends to be stronger because we have the high low as well, but we also have a high high. That reminds me of the instance where we had a high high from here to here, and then we displaced, took out, retraced, and continued lower. EU, however, we had a lower high, displace, retrace, lower. But the thing about EU is that it's more difficult to enter because it's not pulling back all the way to our optimal trade entry. GU, however, gives us those opportunities. GU is also within this daily fair value gap, and it's also taken out this liquidity. So now what I'm expecting is for price to displace downwards. So mark out the liquidity we've taken out. And then taking out this low, retrace it back up into a fair value gap, and I can enter a sell. So that would mean, where's the first fair value gap we can enter? So something I don't like. Sometimes it's the if it's not really a clean fair value gap. There's a couple, right? There's one here, there's one here. Which already has been touched. Neither of them are clean. Just waiting for that opportunity. And again, this is in line with the bias for us to be bullish towards this swing high over here. So bouncing off of this weekly fair value gap so far. Get rid of this so it's clearer. Midway point, pushing up, that's why we're bullish. And of course, we've just taken liquidity. This is the lowest time frame I have available. So yeah. So give me a second. I think I have a delivery at the door. I'm back. So yeah, we're just now waiting for the opportunity to enter. I mean, the only thing I would say, how long is the kill zone for again? 5 hours, right? Or it might be to 10. 3 hours. So we're still within the kill zone. Bum, 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 bum. Okay, we're pushing up now. So we're taking out this low here. It's not a swing low though. None of them are. The only swing low is over here. The only place I would like to enter is up here. It's within the optimal trade entry. We are coming up to it, but I'm not the biggest fan. On the smaller time frames, that's not a displacement at all. I think we wait here because the displacements aren't large and there's also no taking out of a swing low. So maybe we go up higher before we come back down again. Okay, so this is the opportunity to enter. We have to trade it below this low, and then we've come up to close to this fair value gap. But I don't know if that's enough for me personally. I think I'll enter on the second idea because this is a swing low right here. So let price take that out. I'm not entering that. So let price take out this swing low, and then retrace, and then we can get in. Because I think what's key here is that we have to be careful because there is still Asia's high that price could take out before it wants to go down. So we have to be careful in that regard. So we didn't exactly reach this high right here, and I'm very picky. The price get into the fair value gap, not close to it. Okay, so that area here wasn't valid. Neither was this area. Now, why is that? Well, first of all, context matters. It's not just blindly entering off of value gaps. They're just more so markers when to enter when everything else is looking good. So the most important thing will, funny enough, be the daily time frame. Have we got the bias right? We're bearish here. Why are we bearish? Because we're in this fair value gap. We've got a downtrend in the market. We've taken out this side of liquidity. We have an overall target over here. We've come up to an optimal trade entry from this this high to this low, and we're potentially forming a swing high within the fair value gap. So that's why we have our bias. And you have obviously DXY context, the EU context as well. So there's multiple reasons why we should be bearish, right? That's number one. Number two is then, okay, now we're bearish. Have we had an event horizon or event opportunity, an event that creates an opportunity? Well, here there isn't an event that's created. There is an event that's created opportunity, which is that we're taking out London kill zone. But again, context, everything matters. Context to your daily, your hourly, your 1 minute, even every time frame has to have context. That context is the skill set. London kill zone's high is great, but there's also more liquidity above it. One, number two, if we are going to utilize this, we need a perfect. We have to execute our entry model perfectly. We can't take shortcuts because we know price is going to go that a certain direction. No, we always wait for everything to be checked off. So the London Kills did classify as a event horizon, but the context is that there's one right above it, which is better or stronger because on the daily time frame, it's also an area of liquidity. As you can see, we marked it out, and as I said, the most important time frame is the daily. So on the daily time frame, this London doesn't mean anything, right? But on the daily time frame, this Asia high or Asia kill zone high means something because it's the high of the day. So price taking that out would be more effective for price to then create a big move to the downside. Also, if you couple that with the anticipation of news, which is PMI and the USD news, I believe will be positive. But that's besides the point. I don't trade projections because they're so ambiguous and I don't have inside information. So obviously it's illegal to have it anyway, but I also don't have it. So there's that. So I don't trade off of, I don't utilize that because it's legal and I don't have it anyway. So both of those reasons are why. Next up would be then the reasons I do trade, which would be the price action. Now I do believe news tends to be factored into price and you can read the news on the market. So I'll be expecting price to take out this high. Now, does it mean that this taking off the London kill zone or price will reach this Asia kill zone? Is the concept. It taking out this London high does not mean that it will go down from now. It also doesn't mean that this is invalid, that price will also get to Asia first. That's just what I believe will happen. It could very much well go down from here and then obviously classify as a sell off from Asia. London's kills us high, but again, I'll need a strong confirmation, which is why we've drawn out this swing low. When price came down with this leg, it didn't take out a swing low. It just took out lows. And this is the 1 minute time frame. It just took out lows. But none of these lows are swing lows. This is the only swing low here. But we created one with this leg over here, which is now a swing low. So price takes this out and it displaces stronger than this because this displacement wasn't that strong. The size of the fair value gaps wasn't that much. So it takes out this swing low with displacement and closes or trades down here, then I would like for a price to come back up. Then I'd enter my stop loss above this. But I'd also be cautious because we've now just created equal highs. So there's a lot of depth to it and it's never really perfect a lot of the time. Perfect would be Asia kill zone, sweep the highs of Asia's high through the Asia kill zone session. Once we sweep that, displace cleanly, no wicks, 3 fair value gaps, I'll pull back into the fair value gap, halfway point, trade into it. The first fair value gap candlestick contributed to the fair value gap is not that big, so my stop loss is tight, and I'm targeting the overall low of the day, and the price gets there before the end of the day. That would be a perfect setup, which could be anything from like a 1 to 3 to a 1 to 20, right? What I described is more likely 1 to 6 and above risk reward ratio, and then of course we put in however much we put in, and then that's how we get paid. So there's a lot that goes into just one trade, you can see, but the main discipline of this strategy for me is just, it's not perfection we're waiting for, but it's everything checked off. And then on top of that is to be patient. Those are the 2 most important factors for this strategy. Patience, because you're going to get a lot of false flags. You're going to get a lot of things telling you to enter a trade, like experience, fear, all of this stuff. But that comes, the ability to trade with those feelings comes with skill, experience, and time, which is interesting because you need experience to reason with the voice of experience. Because think about it. Let's say you have a sensei or a teacher talking to you, right? And they're trying to teach you everything they know. and they're trying to teach you. Let's say you have a teacher in secondary school or what's it called, high school, and they're trying to teach or talk to you about things that they learn in university. So things of the PhD standard, you're not going to know because it's too advanced. But the way for the student to know is for them to go through the process of experience to then relate to experience. It's like you need more knowledge to gain more knowledge, right? And a professor doesn't jump straight to a PhD. They go through his school, then they go to university, they go get their bachelor's, then they get their master's, then they get their PhD, generally speaking. You rarely jump. Why? Because to get the PhD, you need experience to even understand it, to be able to receive it. So it's in the same way that you would need knowledge to gain knowledge, right? And if you don't have knowledge and you try to put yourself in exposure of advanced knowledge, it may be too much. It'll be overwhelming. You may not have things you can relate with because you don't have anything to connect with what the person's talking about. In the markets, it's the same thing. You will have experience trying to tell you, right? Remember, your own student and your own teacher at the same time. It's a very difficult relationship. But when your teacher side of yourself is telling you, "Oh, I know prices. I've been here before. Prices are probably going to go this way," it could be right, but it could also be wrong. And it could be wrong in the sense that your lower self, in that your child self, your learning self, student self, listens to that voice, but it skips over basic acts of conduct that even though you know where price may go, you still have to follow a blueprint of decision making skill sets, and you still have to follow a pattern or a structure to how you would enter that, trade. So sometimes you may know that something is going to go up. To I may know that this is going to reach 133.2. I may know it's going to reach this red line, right? Just because I know doesn't mean I would win. Let's say price from this moment goes down. If I don't know when it's going to happen, but I know it's going to happen, and I just keep blindly entering cells, and I know this information from all the way back here, think about it. I would enter a cell here, thinking this is valid, targeting this. I'm like, well, I know it's going to go here anyway, so I'm going to hold my trade. Let's see, I had it very tight, right? Well, you got stopped out. And you don't even know when it's going to go down. So when is also important to how. I know it's going to get there, but when is it going to get there? How is it going to get there? Anyway, hopefully that wasn't too. I did use some of the wrong words, but I'm low-key waffling a little bit. But anyway, I'm expecting a big move here. This is no big move. Like when you see an elephant stamp into a small swimming pool, right? That's the example that ICT gave. There's a children's swimming pool that you put outside, and I have neighbors that actually, when some weather's nice, they're very smart because they make the most of it. And I remember especially the children, they gather together, they'll buy like a swimming pool that's like they put outside in the front kind of community area, and then the children will be having fun. And I'm thinking, okay, imagine they filled up that water and the elephant came, splashed into the swimming pool. They don't have to do much, and the water displaces heavily. There's a big evidence. And so if I see a big puddle of water outside of the swimming pool in a short time, let's say I go there, it's full, I come back into my house, I go back outside 2 minutes later, and I see the water expanded everywhere, like literally everywhere. There's no children inside. I'm gonna say, wow, what kind of animal was involved? And I may not know exactly what the animal looks like, but I know the animal was there. And where the elephant goes, if the elephant has the idea of success, I want to follow that idea of success. So I look for the trails of the elephant so I can find the elephant. And once I find the elephant's path, I can then follow him and also become as wealthy as the elephant who knows where success is. So that's the idea of the footprint, and I don't see any footprints. So this is just normal price algorithm, right? So we're looking for these types of move here, and currently we don't have that. Like I said, that's good in the sense that we want, and I'm expecting for price to take out Asia's kills on high, but we're going to be on high alert because these guys can be quick, and there's also news at 3 o'clock, and it's currently 1:30, so it's about to be New York open. So that would also make sense from the open that we'd get manipulation to the Asia's high. And that would also help. We could also take out this New York's kill zone's high because almost equal highs here. And then that would also be valid. But again, the footprints is what we're looking for. So we're just going to monitor the markets for now. think we'll just set alerts and focus on something else. Hello. Come on, institutions. I know you want to. technically came up to this imbalance here. Trade. It would have had to do it in a reversal, the trade below, then come up to this fair value gap. No, this really logo. Decision. I think he probably could have been too, I'm not gonna lie. Because we did trade below this swing over here. I messed up. I didn't react quick enough to this. So sneaky, dude. I would have been the entry like this. Right in front of my face. Oh, that's so annoying. Okay, now here's the thing. We can get in again. Let's focus here. That's so annoying. I was looking at the wrong thing. That was the entry right there. We created a low here. I was focused on this, but we had traded below this here, pushed up into this fair value gap, and then we sold off. Now we have to wait for potential retracement. Look into here. Oh man, we literally had it so close. So close. It's annoying because I've waited so long. That's what's like annoying me.
Did I take your fork?
Wait, what? I didn't say 2.37. Oh, that's difficult to get in there. So if it was still in the trade right now, a 1 to 8. This is so painful. I will keep it a buck. Yes, this, that, the third. It hurts, mate. A 1 to 8. Minimum, I think. The EU hasn't done anything. It hasn't taken any liquidity, so I can't look at that for opportunities. Okay, so the other option now to get into this trade is we've taken out this swing low on the 5-minute time frame, which is the first swing low. To be fair, this is also a swing low, but this swing low here is the first one. So now, from the 5-minute time frame's perspective, a retracement. Well, it depends how low we go. We'll probably have to zoom in anyway. I'd like to personally would have to be here. But at the same time, not much we can do. As annoying as it is. The good thing is that we can always get back in, but mm, swing high, swing low. Mm. Cut. Got into a sell here. Nearest daily liquidity is all the way down here, so I think it's gonna pull back into this range here. I think this is my best case scenario target right here. What is this? Gee. Posted. Oh, it's not USD GBP, sorry. It's the other way around. Let me know when we get to yeah. And another annoying thing is that I wasn't able to put in as much as I would have liked. It's what it is though. We remained disciplined, stuck to the rules. That's about how we felt. Upset that we missed our original entry because of a slight mistake, but we kept to our strategy and we were consistent. And I'm just here to show that it's better to follow your strategy than it is to follow your emotions. That's all. So now that we've entered the trade, set the alert. The best thing to do is dip. Obviously, we have news at 3 o'clock, so that would obviously be either next time we come on the markets or if our luck gets triggered. So those are two reasons why we'll be back looking at the markets. In the meantime, I'm going to relax and chill for a bit, and I'll catch you guys later. It's been boy CJIC, and I'll see you tomorrow. Stay tuned on the Telegram if you want more information for today's trade. Peace.